Well, the Trump rally leads to strong gains for the month of November. The Dow Jones Industrial Average up better than 4% since Election Day. The S&P 500 up better than 2%. Joining us right now is Mainstay Capital Management CEO and Chief Investment Strategist David Kudlow. Good to see you, David. Thanks so much for joining us.
Good morning.
Would you buy into the rally today, or have we missed it?
Well, we've had a very nice rally since the election. Large caps only up a few percent, small caps up about 11%. So we've had a strong rally. I would, at this point, look for a pullback for investors now. Look for a little bit of a consolidation, a little bit of pullback. And we've seen that the last couple of days.
And then what do you do? I
think then you look at the sectors that are going to do well going forward here, based on the tax policy that's been talked about, based on pro-growth strategies, rollback of regulations. Look domestically, look at small cap, and look at value. And specifically for a sector of the banks.
How do you think this will change after the inauguration, though? Do you think it'll change it drastically?
Well, what we're all looking for is, we had a lot of policy statements, or we had a lot of statements during the campaign. How much of that becomes policy, and how much of that it gets reflected in, and what's actually going to happen versus what people expected to happen.
You still like banks, even small regional banks, smaller banks, with the rally that we've already seen? Do you think that, are you worried at this point that they've gotten a little ahead of themselves, or a little expensive?
Yeah, I think right now we've had this strong rally, so it makes sense to wait for a pullback consolidation. But if you look at banks in general over the past several years, have really been held back by regulation. We've really had an atmosphere and a landscape where banks have been suppressed. We've had regulatory headwinds. Now we're seeing lending improving. And your interview yesterday with Steve Mnuchin and Wilbur Ross, I mean, that was very enlightening and very encouraging for what that means for banks and business in general. We've had pro-regulation the past several years. Now we're going to have pro-growth. And we think that there's a long runway ahead for the banks.
Well, and net interest margin certainly ready to improve almost immediately, given what's happened in the bond market.
Right. When I was here in mid-October, I was talking about the regional banks based on net interest margin, the increase in interest rates to come. Well, now we have the regulatory headwind that's going to be abated as well as another catalyst for banks. And we know with the amount of regulation we've had that's going to be rolled back to some degree, there's just a long runway ahead here.
I think it's a growth plan. We knew it was a growth plan from the get-go.
You knew. You knew.
Thank you.
And now people are like, wait a minute.
I know. I don't understand.
Why wasn't I watching Mornings with Maria Bartiromo?
What's the shocker? I mean, we knew. I mean, rolling back regulations, lowering taxes, it's going to be good for earnings.
Yeah. I think one of the important things that we're talking about and we're tiptoeing around about is the different sectors, right? And that's what investors need to focus on is getting into those sectors. We've seen correlations break down to their lowest levels since 2008, right? So there's this dispersion that's happening. We saw it play out yesterday in the market where energy was leading the market and tech was down. So that's, I think, where people, it's not whether you get in, it's where you get in is the important part. And if you're looking at the financials and you're looking at the XLF, you got to be careful. You want to go into pure play like the pure play banks or the regionals, because the XLF, one of its biggest holdings is Berkshire Hathaway. So it hasn't had that leverage. So I think investors need to be very conscientious of how they're going to be playing this market, especially in the new administration, given the divergence of policies from this previous administration.
And I think that's important because, you look at what happened yesterday with OPEC, what that did for oil. But we know that oil pricing now is controlled by the frackers in the U.S., not by OPEC.
It's $50 a barrel now.
And when we get into the 50s, that's what puts a cap on it. Biotech, we saw a pop right away because of the political risk that was abated there. But as we look at value, we look at industrials, consumer cyclicals, and I just love the banks. I can't say it enough. What runway is ahead, that's where we see. In this past month, that rally has given us an indication. Growth is up 1% since the election. Value up 5%. That takes us.
And the banks are trading.
Financials up 13% in a month.
Yeah. Right. And small caps.
No, in a week. I'm sorry. Yeah, it's a month-to-date change. Yeah.
Right. And small caps versus large. A lot of this is about. We call it the America First trade. also referred to as the Trump trade, but we look at the domestic companies that are going to flourish in this environment. They're going to have the incentive to invest.
Well, this election was about small business, let's face it, and we knew it because every time we spoke to small business, they told us the same thing. They were desperate for Trump economics throughout the entire election.
Even people here in New York City, that these small business owners would lean across the counter and ask me who was going to win the election.
Yeah.
I'm like, oh, well, and they're like, I'm not a Hillary supporter.
Right, and then they would say to me, go Trump, go Trump.
The banks have run, but they're not at historical highs in valuations. They're actually at muted valuations, so they're not expensive if you look at that metric. And we're talking about the small businesses. Small businesses are going to benefit from the stronger dollar and the GDP growth.
Yeah.
Those are the tailwinds. That's why you can look at the Russell 2000 and the small caps, because it's only going to continue to grow. Mnuchin said 3 to 4% yesterday, it's been bottled up because we have had the weakest recovery, sub 2% growth, so it's been bottled up. So that's a big tailwind for the small caps.
Yeah, he was talking about GDP growth, 3 to 4%. Real quick, jobs number tomorrow. Good number? What are you expecting?
We think a good number. What we all eyes are on wage growth. We had a good number last month, 4% wage growth.
Yep.
Consensus is 0.4%, 0.2%.
0.4%, yeah.
Yep. 2/10 consensus. We think that comes in strong. That's really what we're looking for, is that wage growth to come through.
David, good to see you.
Thank you.
Thank you so much. David Kudla joining us there. And tune in tomorrow morning. We've got our special jobs report. 8:30 a.m. is when the number comes out. 8 a.m. we start our Jobs in America special. We've got a great lineup here as we analyze the November jobs report out tomorrow morning.